In the depths of the financial crisis of 2008, a revolutionary idea began to take shape, one that would challenge the very foundations of traditional banking and money itself. In October of that year, an individual or group under the pseudonym Satoshi Nakamoto released a white paper titled Bitcoin, a peer-to-peer electronic cash system. This document outlined a vision for a decentralized digital currencies that would allow people to transact directly with one another without the need for intermediaries like banks. The concept was radical, a currency that operated on a technology called blockchain, ensuring both security and transparency. The origins of Bitcoin can be traced to a growing discontent with the banking system, which many felt had failed them. The 2008 financial crisis had exposed the vulnerabilities of traditional finance, prompting a search for alternatives. Satoshi's proposal was not just about creating a new form of money, it was about reimagining the entire financial system. Bitcoin was designed to be a digital asset that could be sent and received over the internet, allowing for peer-to-peer transactions that were both secure and anonymous. This was made possible through blockchain technology, a distributed ledger that recorded all transactions across a network of computers, ensuring that the same Bitcoin could not be spent twice. At its core, Bitcoin operates on the principles of decentralization and cryptography. Unlike traditional currencies, which are issued and regulated by central banks, Bitcoin is created through a process called mining. Miners use powerful computers to solve complex mathematical problems, and in return, they are rewarded with new Bitcoins. This process not only generates new coins, but also secures the network, as each transaction must be verified by multiple miners before being added to the blockchain. This system eliminates the need for a central authority, making Bitcoin resistant to censorship and fraud. As Bitcoin began to gain traction, it quickly caught the attention of tech enthusiasts and libertarians who saw it as a means of financial liberation. The idea of a currency free from government control and inflationary pressures resonated with many, leading to a growing community of supporters. In 2010, the first real-world transaction using Bitcoin occurred when a programmer named Laszlo Hanyecz famously paid 10,000 Bitcoins for 2 pizzas. At the time, Bitcoin was worth just a few cents, but that transaction would later be viewed as a pivotal moment in the history of digital currency. Over the years, Bitcoin's popularity soared and its value fluctuated wildly, attracting investors, speculators, and the curious alike. By 2017, Bitcoin had captured global attention, reaching an all-time high of nearly $20,000. This meteoric rise sparked a wave of interest in cryptocurrencies and blockchain technology, leading to the creation of thousands of alternative digital currencies, collectively known as altcoins. Bitcoin became the poster child for this new financial frontier, often referred to as digital gold, due to its limited supply of 21 million coins, which creates scarcity and drives demand. The impact of Bitcoin on the financial world has been profound. It has challenged the traditional banking system, prompting financial institutions to explore blockchain technology and even develop their own digital currencies. Central banks around the world began to take notice, some embarking on research to create central bank digital currencies, CBDCs, as a way to modernize their monetary systems. Bitcoin has also inspired a new wave of innovation in finance, giving rise to concepts like decentralized finance, DeFi, which aims to recreate traditional financial services using blockchain technology without intermediaries. However, Bitcoin's journey has not been without challenges. Regulatory scrutiny has increased as governments grapple with how to classify and regulate cryptocurrencies. Concerns over money laundering, tax evasion, and the potential use of Bitcoin for illicit activities have prompted many countries to impose stricter regulations. The volatility of Bitcoin's price has also raised questions about its viability as a stable currency. Investors have experienced dramatic losses, leading some to label Bitcoin as a speculative bubble. Environmental concerns have emerged as another significant challenge. The energy-intensive process of mining Bitcoin has drawn criticism due to its carbon footprint. As awareness of climate change grows, Many are questioning the sustainability of a currency that requires vast amounts of electricity to operate. This has led to debates within the community about finding more eco-friendly alternatives or improving the efficiency of the existing mining process. Despite these challenges, Bitcoin continues to evolve and adapt. The development of the Lightning Network, a second-layer solution designed to facilitate faster and cheaper transactions, addresses some of the scalability issues that have plagued the network. Furthermore, the growing acceptance of Bitcoin by mainstream businesses, from online retailers to major corporations, indicates a shift toward broader adoption. Payment processors are integrating Bitcoin into their systems, allowing customers to use it for everyday purchases, while institutional investors are beginning to allocate portions of their portfolios to cryptocurrency. In recent years, the narrative around Bitcoin has shifted from that of a fringe technology to a legitimate asset class. It has garnered attention from Wall Street, with hedge funds and publicly traded companies investing in Bitcoin as a hedge against inflation. The conversation has expanded beyond mere speculation to include discussions about Bitcoin's potential to serve as a store of value, akin to gold, in an increasingly uncertain economic landscape. As Bitcoin continues to make headlines, its significance in today's economy cannot be understated. It has sparked a global conversation about the future of money, the role of central banks, and the possibilities of decentralized finance. While challenges remain, the resilience of the Bitcoin network and its community suggests that this digital currency is here to stay. It has not only changed the way we think about money, but has also inspired a new generation of innovators and thinkers to explore the potential of blockchain technology in reshaping our financial future. In a world where trust in traditional institutions is waning, Bitcoin offers an alternative that resonates with those seeking autonomy, security, and a new way to transact in an increasingly digital world.